Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Okay, everyone. Welcome to the show today. We've got a bit of a hybrid guest into the studio, someone that works within the property investment sector on the development side and property identification side. But I've asked him to come to the studio because I want to chat more about his personal journey investing in property in Australia, how he's gone about doing it, the type of stuff he's bought, challenges, trials, tribulations, all that sort of stuff. So I've been thinking about how to go about this particular conversation. I'm going to keep it more on the investor story rather than I work in the property investment space story. And as you know, we like to try and get both types of guests into the studio, people that work within the game who can give insights and hope to educate so you can make more informed property investment decisions. And we get a lot of data people in and demographers and all this type of other people that can give you so much information you don't know what to do and your head will explode. But Michael Beresford, he's a Director of Investment Services at OpenCorp. How you going, mate? Welcome to the show.
Very well, Phil. Thanks for having us.
So you work in property investment, but you're a property investor as well.
Yeah, well, it kind of happened in the reverse order. So I've been investing for the last 15 years, been involved with property for nearly 20.
Okay.
And been doing OpenCorp for about the last 10 because we basically got sick of having coffees every Saturday helping our mates for free that wanted to learn from our experience. So we thought, well, bugger that, we'll take it more widely and help the other Australians out there that maybe want to leverage our experience and expertise to apply the same strategy and approach that we've applied to our own investments.
So you investing in property, so you've been doing that for about 10 years now, right? When did you buy your first property?
So I bought my first property 18 years ago now.
Oh, okay.
It was an ex-principal place of residence with a now ex-partner. Yeah, sold that when we broke up, kept saving, bought my first investment in 2003 and gone from there.
So how big is your investment portfolio now?
So I got 10 investments plus my own home.
Okay. And whereabouts do you live?
I live in Melbourne.
Okay, so your principal place of residence in Melbourne, and you got a whole bunch of investment properties.
That's it, scattered around the country.
Yeah, where are they? Whereabouts are they based?
Melbourne, Brisbane and Perth.
Okay.
Yeah.
When did you get into the Perth market?
November 2003. So
okay, so you've actually done all right out of it, have you?
Without my crystal ball, it's been very good. It basically took off pretty much as immediately after I bought it.
Yeah.
And had doubled in value within probably 4 to 5 years and trickled along since.
Okay, you still hold the assets there, do you?
Yeah, haven't sold a property ever. Yeah.
Okay. And what do you think about Perth moving forward? Are you buying more there right now, or are you going, oh, maybe I'll wait a little while and try and pick the next cycle?
Oh, short to medium term, I think Perth will be good. Yeah, there's no doubt that I think there are other capital cities that make more sense right now in Australia. But look, these markets cycle. History's shown that, and Perth will be cherry ripe in the next kind of 12 to 24 months, we think.
Okay.
It's not about kind of chasing that quick buck. For us, it's about being in the market, buying counter-cyclically, buy when before the markets move, and then you get the advantage of the full upswing when they do go.
I always enjoy chatting to people who work in the property investment space, who are property investment professionals, I guess you'd call them, of how they crystallize their own journey. And a lot of our listeners will be going like the language that you're using and how you articulate certain responses to my question is very different to just someone who works as a plumber or carpenter and invests in property as a value and a credit. So it's interesting to see how people that work in property articulate their own property investment, their approach to property investment and strategy for doing so. So the question is, what is your philosophy towards property investment? How do you do it?
Pretty much that, just do it. You can, as you said in the intro, you can have all the information and research is important, but I've spoken to people, as recently as last week that have said, I've been trying to find the perfect investment for the last 10 years and I just haven't been able to find it just yet. And well, imagine if you just bought something average 10 years ago, how much money you would have made today. So I guess action's the big one. I was lucky, I guess you drive your own luck a lot of times or create your own luck. But was lucky to have, mentors and successful people that I'd leaned on and gleaned advice from back in the day. And so that's basically something that motivates us, is to be able to pass on that expertise and try and help people based on our experience. Everything hasn't gone right for us over the journey, I guess, but you learn from that experience, and if you can mitigate risk and improve results by tweaking these knobs and taking care of the 1%ers, but continuing to move forward regardless of what might be happening with the Liberal Party right now, or regardless of what might happen with negative gearing or what the lending market's doing or what Donald Trump's doing. Those things, we call them white noise. They're just distractions. most importantly, understand where you want to get to. Stay the course and take a long-term approach. It's worked pretty well for me.
Yeah. So what sort of properties are in your portfolio? What do they look like? They're houses, they're units, they're old, they're new.
They're all the same.
They're all the same.
So
what do you got?
They're all houses, suburban houses, middle ring growth areas. They're all. I settled on blocks of land on all of them and built houses.
Okay.
So they were new house and land builds. In middle ring growth suburbs, existing suburbs surrounded by existing housing. So you're getting the benefits of building new when you know how to mitigate the risk of an actual building process. That's quite important. But really it's just making sure that we've got supply and demand on our side, where you're in high demand areas that are full of all the amenities and so on. But most importantly, you just haven't got a lot of competition in terms of new supply coming on that can stunt your price growth.
So do you identify empty blocks that never had a property on it and then build one on it, or you knock down and rebuild type stuff?
Yeah, the former.
The former.
Yeah.
Okay. And is there much of that still exists in middle ring suburbs? Is it around there?
Yeah, and I think that's the opportunity is it definitely does exist. And what you're getting, it's not what people naturally think of when we talk about, brand new house and land. The immediate thoughts right out on the outskirts, 50 k's from the city in a bunch of, kind of green acre land. Yeah, you get really boutique developments. So you can constrain that supply, make sure that you're in a dense owner-occupied location. So you've got people that look after their houses and add value over time. And all of that just helps you to create, equity through valuations that allow you to get the next one and grow the portfolio from there.
I think a lot of people get confused, and there is sort of potentially some negative connotation with, house and land packages, right? You speak about these greenfield sites, and if I think about Sydney, I think about northwest of Sydney right now. There's a rail line going out there. There is literally acres and acres of land, which there is thousands of acres of land until you hit that's probably, what is it, the river out there. Where is it, near Windsor? I can't remember.
You're the Sydney side.
It is.
Don't look
I'm going to say the Blue Mountains, right? You hit the Blue Mountains. There's a lot of land still to go, and they're just making roads and chucking houses on it, right? So that's most people's perception towards a house and land package. What you're talking about is building a development, a house on a vacant block of land in established suburbs.
Yeah,
that's it.
That's it.
Okay. Do you think a lot of people sort of understand the difference between the two? Because a lot of times you just have project marketers, I guess, promoting house and land packages out in the sticks versus what you're doing. Is there a fundamental difference to it all?
Oh, absolutely. So, I guess if you think about, and Open Corp are a developer as well. So we understand quite clearly the difference between what makes money in investment and what makes money in development. And 99% of the time, they're very different things. So I think where you have project marketers, you can tend to see through that stuff pretty quickly. If you come across a deal of a lifetime or an amazing opportunity, or you better sign this by 4 o'clock because you're going to miss out. That's not how opportunities work on sound investments. It's research based, and if there's something good today, there'll be something good tomorrow. And so I guess the whole tried and true process of going to a seminar and being sold the dream of Ferraris and McMansions and private islands, and you've got to take action now and buy this. That's kind of the environment that we all learnt about property in 15 to 20 years ago. We went to a lot of seminars. So we're kind of cognizant of that fact. And as an investor, I just look at a very unemotional, rigid approach to a formula and a process, and provided I can tick boxes on all those criteria I'm looking for, that makes the most sense for me. So it's really, I guess, about being able to see through that. If a property is a quality property, it shouldn't need an incentive to be sold. There should be enough demand of people that want to buy it anyway. So they're the kind of things that I guess can be misunderstood with the house and land opportunity. But when it's done right, you can obviously see some great results.
So how do you know, a couple of questions, I guess. First one is, if you've got a vacant block of land in an established suburb, typically why hasn't anyone ever built on that land? Is it just someone's just sat there and nothing's ever gone, or or is it a split of a block, or how does that get made?
No, think about someone that lives in a house on a big block that was the outskirts 40 years ago when they bought it. They can make all their financial dreams a reality by selling a big backyard to a developer who does a land subdivision. But these boutique developments, you kind of said it yourself when you said it's not what people think about when you think about brand new house and land. Clearly a developer that's doing a boutique land subdivision. And when I say boutique, call it, 50 to 200 lots.
Yep.
It's not these 10-year, 3,500 lot land subdivisions that you do get out on the outskirts. They need to make a profit, and they're selling land at market value, but they're not going to be devoting massive marketing budgets so that it fills every, weekend paper and so forth. So the big budgets come on the big projects. So it's really, I guess, over time you develop relationships, you understand who are the developers that do those kind of projects and in which kind of areas and what they base those decisions on. It's a good way of getting some inside information into, policy and planning. And they're really the relationships that I lean on to be able to identify where I invest, as well as our own research process.
So as an investor, when you're building a new property on a block of land, where's the value made? So is it the creating a package which is worth a particular amount of money for resale value? Is it a sort of immediate gain, or does it take time in order to realise the investment or the development costs?
Never say no to an immediate gain, but it's not the primary purpose. It's always paying a retail price for a block of land, doing what you can to get an effective house design where you're not overcapitalising, gives you a good product at a fair market price, and then the growth is really made by getting that research process right and supply and demand driving market movements upwards. Like we talked about with Perth, bought it in 2003 and saw major growth between 04 and 07. So that was really where the upside was. And that created equity that allowed me to then get the next one and the next one. So I wasn't putting cash in to all of these properties. I was just using equity to cover the deposit and costs on each one after that. So I guess what is important to understand with the house and land side of things is the land's one part. But the building is a complex industry that can be kind of exposing yourself to the sharks in a lot of ways as well. So builders make money on big houses and on expensive fixtures and fittings, and you don't ever see a display home that's not kitted out to the nines, and then you're made to feel inferior unless you spec it out the way that you've seen. Being a savvy investor is about how do you spend the least amount of money on the build, because that's the part that drops in value, to generate the most amount of rent and get the best possible valuation. So I call that, and we call that, optimum size and quality. To be really clear, it doesn't mean cheap and nasty and small and boxy by any stretch, but it's efficient and effective. And so being able to control that process, it might not sound like rocket science, but being able to have the leverage to be able to get builders to adjust plans and so on. If you can do that, get the same amount of rent, but spend a little bit less on the build, that might cost you $50 a week less. That's all it costs to hold these properties in a lot of cases. And so that can make a $400,000, $500,000, $600,000 difference over a 10-year period. So I guess the one percenters of the sporting analogy, I come from a sporting background, take care of the one percenters, they can make a massive difference when they all add up.
So it's about really understanding the market that you're building the property in and ensuring that it's going to meet that market as closely as possible. So if it's a family-orientated area, you make sure you're building places with rumpus rooms and 4 bedrooms and all this sort of stuff. Or if it's an area for young professionals, make sure that it meets that need as well. And I think a lot of people get this wrong. How do you make sure that you're getting it right? Like the research that you guys go through and yourself personally to understand whether or not a market's going to deliver you value over time. What mechanisms or metrics do you use to get that insight and that intel so you can make confident decisions?
Yeah, so I guess in a general statement, leave emotion at the door. It's not about what you like or what you live in. It's about what makes financial sense. The process that we apply is a pretty easy to understand 3-step process. Call it the MAP process. So it's basically a process of elimination. Which capital city market M stands for market. Which capital city market or markets make the best sense at any point in time? And then that allows you to eliminate straight away certain markets that don't make sense. Once you've got the markets that do make sense, then look at the areas, or growth corridors, suburbs, etc., that have the best supply and demand working in your favour. Existing amenity, existing infrastructure, future amenity, future government spend, infrastructure development, owner-occupier percentage, etc. And then from there, making sure that the actual property is fit for purpose, efficient, as I just said. So really that MAP process, market area property, allows you to drill down and spend your time effectively researching the teeth out of certain pockets rather than thinking about what most investors do, we've found, is look around the corner from where you live because you know the area. In 15 years of helping people invest, not one person's been able to tell me when they say they know an area, can't tell me the percentage of owner occupiers in the suburb they live in. So what you know and what you like, can often be the first step towards taking the focus the wrong way in terms of being emotional. Property doesn't go up in value if you drive past it every day. So it's about following that process, and that's what we apply. Sometimes we get it spot on and you see growth between when you settle on the land and when the house is finished. That's ideal. Sometimes it takes a bit longer, but that's investing. But if I'm making sure that each property that I have is paying for itself or very close to with a low cost to hold, I can hold it for the long term without it impacting my lifestyle, and the growth will happen when it happens.
And I think the important point there for all our listeners is you got to leave emotion at the door. It's you got to be completely disconnected from whether or not you like the property or whether or not you think that you'd like to live there or your prejudices about why you might or might not want to live there. It's got to come down to the numbers, and you need to understand why you're investing in property. And for most people, it's to try and create wealth. So at a point in time when you choose to maybe scale back your lifestyle a little bit, you don't want to work forever, you've got some income to help you live. Michael, why do you invest in property? That reason, or has it got other 100%. Reasons as well? Yeah.
Yeah. So look, when I started out, I was when I bought my first investment property, I was 25 years old. I had a pretty, I've always set goals coming, being involved in sport from a young age. Had a decent idea on what I wanted to create, but I had no idea whether that meant 2 properties in 15 years or 8 properties in 6 months or anything like that. So that was kind of the first step, was really, understand clearly and articulate what it is that I want to achieve, what's required to get from A to B, and then reward yourself along the way as you hit these kind of milestones. I'm happy to share. I had a range of goals. I hit all but one of those by age 40. The one I didn't hit was the big stretch goal.
Okay.
Got pretty close. And so a couple of months ago I had a big party for my 40th birthday, which was the reward for when we, when my wife and I had got to that result.
Okay. And is your goal setting driven towards being wealthy, or is your goal setting driven towards happiness or wellness? Like, how do you frame that?
Choice and flexibility.
Is that it? Choice and flexibility? Yeah. Are you guiding?
I love what I do. Yeah. If I had $100 million in the bank, I'd still do what I do because it's what I love. But equally, if I wanted to take a couple of months off and we love travel, go to Europe business class for a couple of months, then have the choice to be able to do that. Not be, tied to Monday to Friday, 8 to 6 and be in the rat race to really, take control of that and give ourselves the choice and flexibility to do what we want when we want with the kids.
Have you worked out you want to do this forever, or you think you'll pull stumps at some point and just go, that's enough, I'm set, I'm good?
In terms of investing or work?
It's both.
Happy doing what I'm doing for the moment. I'm sure they'll probably get a point where it'll be a little bit less fun for the kids to hang out with us. So we might want to fast track a bit more time with them before they lose interest in us. But from an investing point of view, look, I'll just continue to add to my portfolio, when I can. And just making sure that that's working within, borrowing guidelines and loan to value ratios that mean that, it's the property's well and truly paying for itself and I can hold it for the long term. And not needing to be over aggressive from this point forward, given that the foundation of the portfolio is really well set.
And do you have a number, which is when I stop working, I want this to be my income coming in without having to do any work, which I'm going to generate from property? Do you have the number? Do you know what that is? Does it change all the time? Does it keep going up, or is it?
I'm pretty ambitious, so it was pretty high to start with. Yeah. And you got to factor in inflation, all those kind of things. So I kind of bring it back to today's dollars. But my number's pretty high. But in terms of helping the listeners out there think about what might be good for them, the thing that I found that resonated with most of my family and friends when I was helping them was, well, if you like your lifestyle today, imagine replacing your income without having to go to work. And that's a pretty good place to start.
Yeah. And I'm not going to ask you what your number is, because you obviously don't want to disclose it, but who knows your number?
My wife and I.
Is that it?
Yep.
No, that's it. So you don't share that overall goal or vision or ambition with anyone else except for your wife, which is cool, by the way.
Yeah. A lot of people in my close and wider network are aware that I'm an investor and so forth. A few more people know the size of our portfolio after this chat, but it's not something that, we don't go down to, Auskick or whatever with the kids and talk about what we do. That's about kind of having fun. But if people are interested and want the help, we're more than happy to kind of share the experience and give it.
That's cool. And I guess working with investors, what sort of people are sort of attracted to the investment philosophy that you guys have? This sort of buying, building on vacant land, I guess.
Yeah, look, I guess really it's people that are motivated to improve their financial situation, but don't necessarily know where to start or what to do. So, if people have got a bit of money and the motivation, we can harness that and help them. But, we're also realists, and the fact that is that, we just ticked over 25 million Australians a couple of weeks ago. Only 10% ballpark of Australians actually have an investment property, and a fraction of 1% actually get to a substantial portfolio of 6 or more. So, we're very proud of the fact that 9 of those 15,000 odd are in our office. So we know that the process works, but 9 out of 10 people that you speak to are never going to have an investment property in their portfolio. So that can be one of the biggest challenges for the motivated investor out there. Is human nature is that we want kind of reinforcement and a bit of comfort that we're doing the right thing. You've got to talk to a lot of people to find someone that's working down the same channel as yourself if you're motivated to invest. So that can be one of the big challenges. And I guess where people find comfort in talking to like-minded people that kind of help them on that journey.
Yeah, it's one of the rationales behind this podcast, right? Because you're talking about a tiny fraction of Australians own 6 or more investment properties, right? Like, it is a very, very small amount. So it can be quite lonely for a lot of people if they have chosen to go down that path in wealth creation and spend the time, effort, attention and energy into building a portfolio. You need to be able to speak to other people who are sort of down a similar path just to share the stories, which is a big part of what we're doing here. And hence the reason why we wanted to get you on the show to have a chat. How are you finding money at the moment, getting finance? Are you...
Yeah, it's tough.
Tough? Yeah.
Tougher than it was. Yeah. And look, I haven't added to my own portfolio consistently. And when I say consistently, it's not like I bought one every year for 10 years. Yeah. There are times when you can accelerate that because the lending environment and your own personal situation allows. And then there are periods where I've had, 2 or 3 years on the sidelines because it doesn't, and so I'd love to be buying more and being aggressive now because, I always come back to what Warren Buffett says, be greedy when people are fearful and fearful when people are greedy. And we see a lot of fear out there. So, the opportunities are great, but from a lending perspective, it can be really tough. And I'm sure a lot of the listeners have found that out there, but, keep your finger on the pulse. It won't always be this tough. It hasn't always been this tough in the past, and these things cycle. It's just about doing what you can at any point in time to improve your situation to be that next step closer to being able to add to your portfolio.
So what do you say to the merchants of doom saying that property's stuffed and everyone's going to go broke and, we're going to plummeting prices, all this sort of stuff? What do you say?
I'd love to, especially, there's one guy out there, Harry Dent, mate. Some people probably heard of him,
Every now and then he pops up in Australia trying to flog a book and he comes out with some stupid number. But anyway.
It's funny, Phil. I don't normally read the news on my phone lying in bed, but I was this particular morning and I was reading on ABC and I saw this thing about Harry Dent and 2 paragraphs in. I'm thinking, oh my God. And my wife Beck said to me, she goes, what? I said, I bet you this flog from America is trying to sell another book. And then sure enough, in the 5th paragraph, Harry Dent's new book on XYZ. It's a well-trodden path, and I'd love to have 5 minutes with these guys. And I'll just say, what do you say to the people out there that listen to the headlines that you create? You said back in 2014 that Sydney was overvalued to the tune of 60%. Now you're 140% wrong.
Yeah.
What do you say to people that worst case sold a property back then rather than just keeping it and holding it? Far less people that might have been motivated to buy more and invest in property that didn't on the back of that advice. Where's the recourse for them? Harry Dent's not paying their pension, No. So it's something that you can probably hear the passion in my voice. It's something that gets me really fired up is, I guess, the emotive driven headline sensationalist type approach that we're surrounded with in the media these days. We kind of coach people on the fact that, social media and the internet, all of these kind of things have kind of invaded our life. They give a platform to anyone that's got an opinion and it's everywhere, which means it's short term. Those 2 things completely counterintuitive to what's required to be successful with investing. Long-term approach and block out the negativity and stay the course. So that's what's making it hard for people, I guess, to have confidence in that journey. But they're the kind of things that we try to talk to them about.
But I say to those people, well, 2 points. Number one, the number of Australians that only own 6 or more investment property is a tiny fraction. The reason why, because a lot of people make the wrong decisions, right? They probably have sold an investment property because they heard Harry Dent say it's overpriced by 60%, when if they held on to that for the 5 years since, it would have doubled in value, right? So people need to be responsible for making their own decisions, and they need to be conscious. And I think there's enough information in the market today that you shouldn't be an idiot investing in property. It's pretty simple, right? There's this podcast, there's heaps of podcasts, there's guys that run businesses like yours. There's some very good operators out there who are just here to give information to investors on the basis that they don't want them to make stupid investment decisions. They still make stupid investment decisions. You know, whose responsibility is that? It can't be everyone else's except for our own. You've got to take your own responsibility.
Yeah, you do.
That's my view.
And 100%. And that's the only thing that you can control is I guess, what you're doing. And, you know, these things can be kind of, strengths can be weaknesses and vice versa. The amount of information out there for some people can be crippling, because they take in everything and they get confused as a result, and then do nothing because they have lack of clarity. You know, the analogy I use, I say, well, look, if you want to learn how to play tennis and you've got the choice of learning from Roger Federer or the local guy down at the tennis club, where would you go? Pretty good rule. Go to people that have done it themselves and that are continuing to do it and can teach you about how and why their process works, and then decide whether or not that's right for you.
Yeah, it's not a bad. You like a sports analogy, don't you?
I do.
What sort of sport did you play?
A few. Footy, AFL mainly, and baseball.
Say you look like an AFL player. You're probably quite famous. I don't know who you are, but
not at all, mate. My brother's a famous one.
Oh, is he?
Yeah, he got to the major leagues with baseball.
I don't follow it, so that's cool. So if you could buy today, I don't think you're in the market of buying. We spoke about finance very quickly, but if you could, where would you be? What would you be doing? What would you be buying?
Well, in terms of my own portfolio, which it wouldn't be the same for everyone's portfolio, but what I definitely would be buying is a 4-bedroom house on a standalone block of land in an existing suburb in a major capital city. It wouldn't be Sydney, it wouldn't be Perth. So yeah, Melbourne or Brisbane would be a pretty good bet.
Yeah, and over time, you're not going to go too wrong with it. Even if it doesn't shift as fast as other markets, I think property is a long-term play. And I think your investment philosophy and strategy is hold, right? You've got to hold. It's the only way you can create true wealth, particularly in a lot of people can make good money in markets which are in flux, and the Sydney market's in flux right now. So I imagine in 10 years' time, people will be looking back to this period going, oh, I absolutely killed it. But there'll be a lot of people on the other side of the spectrum who have absolutely flopped because they've bought at the wrong time. And even now in the city market, if you bought 6 months ago or you're settling on off the plan development or something, I'd be probably quite concerned about it. But it is a timing thing, and it is a long-term play.
And the timing's exactly, you know, the precursor to that previous statement. I've got property in Perth, love being in Sydney. The time will be right to invest in those locations. But, you know, by what I am an advocate for is spread my portfolio across multiple capitals. And that way you just get exposure to multiple growth cycles in every 10-year period rather than one growth period every 10 years.
It's cool.
Yeah.
Enjoy the chat, Michael.
Thanks
Keep
for having us, Phil.
Well, let's get you back in. Let us know, Gowan. Next time you buy, we'll get you in. You can tell us all about it and whether or not you're happy with it. I'm sure.
No worries at all.
You're probably quite fortunate, and I always say this to people that work within property investment, and myself included. I don't work within property investment, but I sort of work within a community. Such a fortunate position to be in, because you get so much information, right? Like, there is no information that you don't get access to, and information is power in terms of helping you crystallize a particular strategy or even stress testing some idea that you've got. So we're in fortunate positions to be able to be have that easy access to that information. But that said, anyone can get it if you go and look for it as a property investor. It is out there, and not being an informed property investor decision is no excuse for that these days.
100%.
So it's a good one.
Yep.
Thank you. No, enjoy the chat.
No worries at all. Cheers.
Nice one. Remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing to our daily morning newsletter, so the first to know that what's going on in property and property investment, smartpropertyinvestment.com.au/subscribe. We're also on social media. Go and check us out, like us, follow us, so you know what we're up to. And we'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.